right? So we welcome everyone to this session. Please feel free to participate. Today's session will be facilitated by Mr. P, in short, Mr. Pida, right? He will introduce himself and let's enjoy the session. Anything else we will discuss in the WhatsApp group. Thank you, sir. Mr. P, you can go ahead when you're ready.
Thank you, Mr. S. Appreciate the introductions. Welcome, everyone. I'm slightly low, coming down with a bit of flu, but I'll give it the best shot. Thank you so much for joining us on this session. I think Mr. S has already introduced me. Mr. P. There are a couple of things that I just want to highlight before we start the session. Some are just but ground rules. You see, there are those etiquette issues that relates to how we handle groups of this nature. Maybe just because we are meeting for the very first time and we're doing so virtually, you may need to know the gentleman who is going to be delivering these sessions for you. What do I bring on the table in terms of qualifications and my philosophy as well. That's basically what I'll mention before we get into the lesson proper. Welcome to everyone once again. I want these sessions to be very free, and we'll make sure that they are very interactive. Every one of you here has got a right to participate, and I would want to appeal to each one of you to be patient with each other. Group dynamics, it means that we are coming from different backgrounds, we are coming from different qualifications as well. And we need to be patient with each other. When others are asking questions, please let them do so. And at times we do understand things at different times. I believe not in an escalator type of approach. I want us to be in a lift where we get into the lift, we all go up together. We don't want to leave people behind. Mr. P will be my operating name here. I'll go by that just for convenience. Like Mr. S has already indicated, I always want to remain anonymous. I don't want to interact with students because I'm a very busy person. It will be very difficult for anyone to get access to me. So please communicate with Mr. S. I think there's also Mr. Flint there. Then they will convey the messages to me, and then I'll come back to you promptly. I love accounting, and I'm glad you guys are also doing accounting as one of the modules in your courses. And I want us to have this mentality. I don't want you to just think of passing it. Passing it is a bonus. I want everyone to think of it as a skill. And as I tutor you, I want to give you a skill, a lifetime skill, lifelong skill. From our sessions here, you must be seeing some difference even when you get back to your work. It's given that you all are going to pass this module if you get to have a tutor of this caliber. But that's not where I am. I want each one of you to take out of these sessions a skill every day. And at the end of the day, we should have a complete skill set around accounting. I do hold a number of qualifications. I'll just mention those I still remember. I do have a qualification in education. I do have a qualification, it's a BCom Human Resources Management. I do have a qualification at level 7 in accounting sciences. I do have a qualification, a postgraduate diploma in taxation from the University of Pretoria. I do have a qualification at level 9, which is a master's in accounting sciences. Taxation is my area of specialty. I'm currently a student as well. Just completed my CTA level 1, and I started with CTA level 2, which will then allow me to do my ITC, which is your initial test of competency if you want to be a CA. So I've got an addiction of studying. And when I see a group of people who want to improve their qualifications, I really get inspired. So I'm not just a tutor, I'm also a student. I understand you. And that is why maybe it will be easier for me to assist you. All right. And I also assume in most cases when I tutor people, that people do not have a background of a subject. I may be privileged to know certain things, but it's not everyone who may know them. So it is very important that when we explain, we take that into consideration. Right. Thank you so much, ladies and gentlemen. I guess you got briefly who I am. Your qualification is at NQ level 7, and I hold NQ level 9, which is a master's. So I'm sure from there you can tell that you are in safe hands. All right. Now, in tonight's session, we shall talk about chapter 1. And the chapter 1 is just but an introduction of your module. It brings quite a lot of things that are not very important, but for people who would want to have an in-depth understanding of the genesis of the subject, it does even bring that historical background. I'll touch on one or two things there, and I'm sure the majority of us here can go back and read the history of accounting there. The other thing about our philosophy in this group is we always begin with the end in mind. That's very crucial. We begin with the end in mind. Each session must take us to an assessment. And your assessment is your assignment. So at the end of it all, we must be able to say, we've equipped you enough to get 100% in that assessment. I see it's 70 marks. When they convert that, it will give you 100%. So everything we shall mention in each and every session must relate to the assessment. That's very, very crucial. And you can only tell if you are benefiting when you then put yourself on the gauge, and that gauge is your assessment. If you read through the assessment and then you get a ring which comes from your session, then you must know that it is actually adding value. Right, let's get into the session proper. And please feel free, if you don't understand me, you are allowed to unmute yourself, you raise your hand, or you can even put it on the chart. We shall slow down and then accommodate you. First lessons by their nature, because we still are new to each other, they may take a lecture method outlook because we are still introducing ourselves. But as we get deeper and delve into your module, we'll make them so interactive. Actually, I would want 80% of our sessions to be centered on you, and then I must be coming in with the 20%. All right. Now, in tonight's session, ladies and gentlemen, we do have, I want you guys to understand what makes up your module guide. In other words, what is your syllabus? I know we do have the module guides. We have, and sometimes bought the textbooks. If you have not bought the textbooks, you don't need to do that. If you've got a tutor like me, it's not necessary. But this year is your syllabus. Your very first unit is nature of accounting and basic concepts. That's the foundation. When we put a good foundation, it will be easier for us to build on with you. We want you to understand the nature of accounting and the basic concepts. These are the principles that underpin the whole module. Like, if you were to go through the whole module and say, this is a piece of cloth, you'll find unit number 1 will be running through like a red thread. So it is imperative that in tonight's session, we make sure that everyone does understand the basic concepts. And then unit number 2 is going to, all right, just 1 minute. I think I'll mute everyone for now, and may I kindly ask members to unmute themselves if they want to say anything, right? So I've just muted everyone just to stop the interfering noises. All right. So unit 2, which is chapter 2, is going to be recording transactions in double entry system. Actually, that's the most important aspect of accounting. If you understand double entry, some of you beyond these courses that you are currently doing at Regent, you may even be inspired to pursue careers in accounting, because accounting is born on double entry. We will tell you what we mean by double entry. Those two entries, which ones are they? How do they come up about? And once you understand that concept, which is in chapter 2, it will be very interesting for the majority of you to want to do accounting more. It will be like an aha experience where you say, oh, so that's what it's all about. Right. The next chapter, according to your module, is going to be adjustments and closing transfers. And they dedicate that to service industries. We will let you understand that the businesses we shall deal with are categorized in different types. We do have those that offer services and those that are into trading. And they will appreciate that their transactions are unique to their nature of business. So we shall talk to that. And then we shall then get to the trading entries and VAT. And the majority of you are more familiar with that part, because when we think of Pick and Pay, we think of Woolies. When we think of USEV and so on and so forth, they are always the trading type of entities. And where the products are vettable, we'll have to calculate VAT. And we shall then go on to talk about, in chapter 5, an expanded accounting system with control accounts and subsidiary ledgers. This is the old version of accounting. It is fast falling into disuse because of the advent of softwares in accounting. But for you to apply the softwares that you get to use at work, you need to have that background, because the softwares are premised on this understanding of having to deal with the control account as an internal control measure. And the subsidiary ledgers, whether it's the bot ledger, the sales ledger, and so on and so forth. So we shall talk about that in unit number 5, or chapter number 5. And chapter number 6 is going to be non-current assets. I can assure you, ladies and gentlemen, that your choice of course is excellent. I was actually impressed when I went through your module guide. I was kind of like, wow, so there are some universities that are now infusing this in their studies at entry level, because your module introduces at entry level the issue of accounting standards. That's a first. I have traversed the tertiary field, especially in the accounting science department, and believe you me, a lot of universities do have syllabuses that leave a lot to be desired. And I was so impressed. From get-go, you get to have an introduction into the standards. And I was like, do I take this group or not? And on a second thought, when I saw that, I was like, look, I think these ones will be talking my language. Anything else, I usually frown upon it, because it is not accounting. It is something with a flavor of accounting. And you will appreciate when we get to chapter 6, when we talk about non-current assets, we loosely refer to that as PPE, property, plant, and equipment. And there's a standard which is called IAS 16, International Accounting Standard Number 16. It deals with that. And I'm glad your course does touch that, of course, at entry level, but it brings a good foundational understanding. So that's chapter number 6. Your module guide is very long. Usually I'll have these extra boxes for a course, and the chapters will be enough. But you notice that with yours, I still need to continue, because we still have got chapter 7, and this talks about partnerships. An interesting part of accounting. It has stood the test of time. You'll understand currently that the close corporations are almost becoming unfashionable. Actually, in SA, we no longer register a new one, except for those that are already registered. That's your close corporation. But with your partnerships, they take different forms. You can have a partnership that is in the form of a company, a partnership that is in the form of sole trader, a partnership that is professional. Like most accounting firms, they are partnerships. And we will introduce you to that. And we want to show you the records relating to partnerships, the financial statements there. And we'll do that on chapter number 7. I haven't started tutoring. I'm just bringing you up to speed just to familiarize yourself with your syllabus. You can't hit the target if you don't know it. So that's why I'm starting with the target. Begin with the end in mind. I'm a strong fan of Stephen Covey. Right, then your chapter 8 is going to be introduction to companies. That's the birth of modern accounting there, because it brings quite a lot of concepts there. And then we'll have the statement of cash flows. I would have loved them to have it going all out to cover all aspects of the cash flow statement, but it would appear they just gave you the tip of the iceberg. They don't want us to go into detail. We just have to bring awareness around that, meaning that maybe they're saving for a later course. So on unit numbers 9, chapter number 9 is going to be bringing awareness, but I would have loved us to do the cash flow statement using the two methods, the direct and indirect, but they don't want you to do that for now. Right, and then we shall also have unit number 10. You see, it's a very, very long syllabus. I don't know why they made it this long. We've got the cash and cash equivalents. Ladies and gentlemen, at some point, we will have to make you understand that if we were to look at the assets of a business, they're divided into different types. They're the current and the non-current assets. And when we talk current assets, we will find examples such as cash and cash equivalents. And why do we want to dedicate a chapter to one type of current asset? It is because cash is the lifeblood of any business. Believe you me, quite a number of businesses have gone down under because they were not prudent around the cash resource. And I'm glad your module guide does dedicate a chapter on skills around how we do handle cash and cash equivalent. And then we're also going to give you 2 sessions or 2 chapters or extensions to your chapters. And that is to consolidate your understanding. So your syllabus ends on chapter 10. But after doing that, we shall continue and give you the final push, where we're going to be talking much about things that are likely to be impacting your assessment. Should you pursue accounting beyond this module? What are the things that you should watch? What are your takeaway principles? What are your takeaway skills? And we'll also give you one master class where we are going to be saying, let's now sit around and let's look at the assessment. Are we happy that we are handling it well? All right, so that's basically the roadmap of what we are going to be doing together. And at times I come across as very intimidating, but I can assure you I'm a very humble young old man, and you must feel free to shoot at any time. And I won't take offense. I always say to my students, make sure you come fire all cylinders. And I love it when people ask questions, because I'm useless when people don't ask questions. I'm so proficient with accounting so much that at times I get to be useless. I end up thinking that everyone does understand it the way I do. So I would want people to keep on prompting me to the directions that will make them understand better. Okay, so that's your syllabus, ladies and gentlemen. And for tonight, these are the things that I want us to achieve. Number 1, we shall describe the nature and purpose of accounting. We shall explain the accounting cycle and the entity concept. We shall discuss the needs for reporting standards. We shall make you understand the users of financial statements and their needs. We've got a plethora of people who have got interest on the financial reports. And each person or group of persons do have a requirement, they do have a special need, we shall address that. We shall also explain the accrual concept and list the components of the financial statements. And we shall use the accounting equation to present information on the financial position. That resonates with your assignment. Now, talking of beginning with the end in mind, I always want to use people's assignment as a teaser. In case someone saw the assignment and they just packed it away, I want to just highlight a couple of things which we need to pay special attention to as we delve into the lessons. We'll start with the questions and we'll find the answers in the lessons we are going to deliver. When we touch a particular part of the lesson, I wanted to give it a ring to say, okay, it now links up with that question, which I thought I'm not going to be able to answer. This question is from your university or your college, Regent Business School. As a professional, I want to make you understand that I also belong to quite a number of professional bodies, and they are very particular. The professional body that I belong to is to tax practitioners, call it SAITI. It talks of ethics, and it discourages dishonesty. I'm currently a student at SAICA, South African Institute of Chartered Accountants. And one of the things that they emphasize there is professionalism and professional conduct and ethics. We cannot cheat. So what I normally do with the assignment of students is to go through the original assignment without doing the answers. And then when I revise the assignment with them, I convert the assignment into my own figures and my own name. So the assignment that you are given by your institution, I'm not going to do it with you. But I'll do a demo assignment that looks 100% like your assignment at university. So much that as soon as we're done with the assignment that I'll be doing with you, all you will do is just to go back and substitute the figures that I would have given you with those that comes from your university. And that way it's a bit fair than having to commit academic murder. But for tonight, I'm just reading through and highlighting the major things before we delve into the lesson. All right. This here is your assignment. I just chopped it up and pasted it on my PowerPoint presentation. You guys, majority of you are doing Bachelor of Commerce. I don't know if you're mentoring supply or whatever, but it's a generic module, this one. A lot of people get to do it. And this year is the total marks, 70 of them. Right. And the accounting question is the alpha of accounting rules. As the junior accountant at the stationery shop, Paul Cardos, Private Limited, transactions relating to the 2022 financial year. So from get-go, this assignment is based on the accounting equation. And we need to use the accounting equation to analyze a set of transactions that relates to a business called Paul Cardos Private Limited. And it's a very easy one. If we were just doing the assignment, we could do it within this session and be done. But like I indicated to you, we want to give you a skill. And I love it when someone say, I have done this on my own. I never copied, I never plagiarized. That brings that badge of owner. So the transactions that you have there, posters to the value of 550 were, or even their English, there's a bit warped. Posters to the value of 550 were purchased by the primary school. Payment was made in cash. Unwanted goods of 800 rands purchased by Miss Strong on account of were returned. How can they say was returned? The cost of goods is 500. Mr. Prince applied to open an account at Polkadot Private Limited. A limit of 2,000 rands was approved by management. So I'm not going to go through all this because we will come back to it after we have given you the principle and making you understand how the accounting equation works. So these are the transactions. These sentences that you see they've flighted are what we call transactions. And we do have a tool which is called the accounting equation that will show us how the accounting process or the accounting information will be impacted upon. Right. I just wish I had put, let me just see here. I think there should be a table. Yes, this is the table. Thank you. I'm just looking for that. Right. So if you look at this, it says record the transactions 1 to 16 in the accounting format provided. Note that the accounting equation is sensitive to plus or minus and to general ledger accounts, and this is 40 marks. And the format that you're supposed to use is shown here. Now, what it simply says is that for those sentences that I flighted there, each one of them has got a possibility of affecting assets, equity, or liability. So we would want to say to ourselves, if they're affecting assets, which account under asset is going to be affected? And is it increasing or decreasing, and by how much? So that's basically what we'll be doing. If I were to talk about a lay person, like I'm talking to a lay person, I will say to you, those transactions, those sentences that you saw me flighting relating to that business can be grouped into 3 types. They can be put into assets, they can be put into equity, and they can be put into liability. So as you group them, you need to identify the type of account that will be affected in each group and the amount that will be affected. And that is what we call the accounting equation. We shall talk about this in detail later. Okay, so this here is beginning with the end in mind. After our session, we must go back to that and do it. By then, each one of you there will be in a position to say, okay, now I understand the accounting equation and this is how it operates. Okay, so let's forget about the assignment for now. Let's start from the beginning. And I would want you guys to disabuse yourself from this notion that accounting is difficult. Just tell yourself, I'm here to study it for the very first time, and this guy owes me an understanding of accounting. If you don't understand it, it's not about you. It means that I failed to make you understand. Because my philosophy is, if you know something, you can explain it to any person and make them understand. I think we can explain the accounting equation to a kindergarten learner and make them understand because we have got the best view of it. Now let's talk the meaning of accounting first. That's the introductory part. I don't really love talking too much, but the introductory lessons are always like that because you want to bring people into understanding the subject first, and then you then allow them to chip in with discussion thereafter. All right. So I'll pause a bit before I start on the session proper, and to allow people to ask a couple of things, maybe 2 minutes. I know people had something in mind when you join a group like this. You maybe already formed your mind. You already have an expectation. So I'll pause a bit to allow people to react to the introduction thus far. Anyone with anything that they want to say, please unmute yourself and shoot, or you can just put it on the chat. Feel free, guys.
Okay, so I don't know if you can hear me, but
yes, I can.
I do want to say thank you for getting everything organized. I mean, this already seems a lot more professional than what we've been used to for the past few days. So
thank you
very much. Also, I'm not sure if I've sent it already, but there were a few past year papers that region did provide us with. If I haven't sent it, then I will send it to Mr. S soon.
Thank you. Thank you so much. Thank you so much, Kevin. Thank you so much. I really appreciate that print. All right. Thank you so much, guys. I would really love to have all the question papers. I think I've seen a couple, of course, because I did to interact with some guys from Regent. You will also notice that when you send me the question paper, like those take-home homeworks, I'll break them in such a way that instead of using any other example, we use your previous assignments as examples. That one, it really helps. Right. Thank you so much there, Flint. I really appreciate that. Okay. Right, let's see.
Sorry, before you start, just one more thing.
Yes.
I will also send the I think our exam dates, so you can maybe plan with those in mind. Also, I will. There's one more thing I was supposed to send you: the exam dates, and we're going to be with you for like most of the year. So
okay, excellent, awesome. Thank you so much. Awesome. I would really appreciate that. Okay, and I think one of the duties I have, and I owe it to accounting, is to convert a lot of people to end up being accountants. So I want to warn you up front that you may end up thinking, well, the degree that you are currently doing is not enough. Let me do a bridging course and do accounting science. We want to increase the number of CAs in the world. All right, thank you so much then. Okay, I think I saw some contributions there in the chat as well. All right, let's see the. Thank you, Marlene. I see, excited to be here. Looking forward to great results. Thank you so much. Primrose, I must say that the theory of accounting is a lot, but I will go through them. Thank you for agreeing to help us. Thank you so much. Thank you so much, Primrose. Thank you. Right, Emma Shiani. Feeling so much confident already. I'm excited to learn and produce great results. Thank you so much. Thank you so much. Thank you so much. Thank you so much. Appreciate that. All right. I even love it when someone says, I don't know anything in accounting. I feel that challenge now becomes mine. You see, at times it's a bit difficult to tutor someone who already have got to unteach the wrong principles. But when someone says, I'm struggling, I love that point. Okay. So now this here is the introductory part. Explanation. Okay, there's Google there. Thank you, Google. The floor is all yours. You can shoot.
Good evening, Mr. P. Can you hear me?
Quite well, thank you.
Good evening, everyone. Mr. P, what I wanted to find out is when we say accounting is a process of recording,
Yes.
I'm saying financial information. Is it that we record it when it happens, meaning when I place an order today?
Yes.
I record whatever I've ordered today, not when when that stuff has been delivered or when the invoice is received. Because I normally get confused. Do I record it now or when I receive it or when we actually pay the invoice? Thank you.
Right. Thank you so much, Google, for asking that question. Tonight's session will try to answer you. But now that you have asked it before we delve into that, I think it's fair that I do explain that. Now, what we mean by the process of recording is what happens in accounting, as you will see tonight. It is made up of two parts. There's the recording part, which traditionally is called the bookkeeping, where we record transactions as they occur. And in the past, our parents used to record their daily happenings on what they call the journals. So not journals, diaries. So they would diarize everything as it takes place. So when we talk about recording in accounting, you'll notice that we are recording those happenings in the diaries that are called the journals. The word journal is a French term that simply means a diary. So as it takes place, we record it. And now with the aid of technology, you'll notice that we do it in real time. We don't have to wait and then record later. So we will make you understand what is called the business cycle or the accounting cycle, where we'll begin with a transaction taking place, that exchange. And then when that exchange takes place, it is captured through what we call source documents and the likes of your invoice receipts and so on and so forth. And those source documents will then be grouped according to the types. And each group of source document will be recorded in a journal or in a diary. And each diary is for a specific group of transactions. So yes, transactions are recorded as and when they occur. We don't wait until later. All right. And when we talk of that bulk of account is called bookkeeping. And now when we talk about preparing the financial statements, interpreting them, and giving them to the users, then that's the accounting part. And it is historical in the sense that it is based on what has already happened. So yes, Google, when we record transactions as and when they occur. Nowadays, we even have got the benefit of technology and we do it on a real-time basis. You go to Woolies, you go to Pick and Pay. When you are at the point of sale, you will appreciate that there's a tape register roll that the person at the till will give you. And it is written in duplicates. As you get the slip, there's a slip that goes down and it is kept as a record. So that is done instantly. As soon as they scan as well, the barcode of the product, it will automatically reflect that that product has been removed from the set of inventory, and that will be updated instantly in real time. So yes, when we record, it is recorded on real time. But accounting itself is historical. As soon as we have done up to bookkeeping, everything else, when we do the financial statements, we now base it on the history of what we have recorded there. All right. It will become more clearer as we do the practical part of it. Thank you so much for asking that question. All right. Right, Husani there. Now I have anxiety. Let's see there. Because of accounting. No, don't worry, Husani. We are all here for you, and we shall make sure that you feel more comfortable and enjoy. And I want also you guys to be patient with yourselves. It may not be like first day you understand everything. I'm very proficient in accounting, not because I'm special. It's years of practicing, and I've seen so many syllabuses. And if I can do that over time, it means that given the right support, each one of you sitting here tonight will be able to feel accounting is their thing. All right. I last did accounting when EMS in grade 9. Oh yes, I do understand and there's no accounting then in grade 9. I had to investigate their syllabus, and I noticed they dedicate one chapter to CRJ and CPJ, and that's it. So I really understand you there. All right, let's see there. I also never did accounting. Nazira, thank you so much. I like you. I like you because you make me more relevant. If you've never done it, then I'm the right tutor for you there. All right, thank you there. So I'll take that into consideration as we start through this, so that we bring you through and bridge those gaps. All right. This is my first time doing account. Yes, Monta, I do understand. I'm a science person. Yes. You were playing with the atoms. Now, welcome. You're playing with the rays now. And you will really enjoy it. Okay. We'll make money make sense, guys. All right. It's Ethan. It's my first time doing accounting, and I'm looking forward to cracking this. Thank you so much. And when you talk of cracking, you make it feel like it's a rocket science. This is not difficult. Believe you me, you'll enjoy it. You'll enjoy it. Okay. All right. Thank you so much, Nazira. Thank you so much, Nazira. Appreciate that. Okay. Now, let's get back to the meaning. So I decided to bring the most basic definition of accounting. Your module guide is getting around. They don't want to go straight into it, but I decided to filter through that forest of information so that we make it understandable. So accounting is the process of recording, analyzing, and interpreting financial information. So there isn't anything special about accounting. Your module says here you account for your parents when you go this. They're trying to tell you that what we do in accounting, first, it begins with us recording. And the question that we may be having now is, what are we going to be recording? And this whole module will be answering that. And how are we going to be analyzing it? This module will give you tools that are used to analyze. And we'll then be able to interpret. So this makes you understand that accounting is a product. There is someone who delivers it and they're end users. And it will only become useful to the people who are going to use it if they understand it. If they don't understand it, you need to interpret it. So what are we doing in accounting? We record, we analyze, and then we explain so that everyone who have got access to that information can easily use it to make informed decisions. So accounting is the process of recording, analyzing, and interpreting financial information. So that's the standard definition of accounting, the most basic one for that matter. Now there's a gentleman. I didn't want to go that route because I feel it's a waste of time, but your module guide has got that they relapse into history. You can tell the people who wrote the module guide were not accounting people anyway. There's a gentleman who is called Luca Pacioli. He's an Italian guy. He's credited as the father of the modern day accounting. Why do they call him the modern day father of modern accounting? It is because he designed one of the crucial concept of accounting, which is called double entry. He was the first person who made the world understand that in the process of giving value, there must be a giver and a receiver. If I were to use it that way, a giver and a receiver. And because a giver has given value to the receiver, we need to record both the receiver and the giver. If you give someone 50 rands, you seed a value of 50 rands, and the other person acquires 50 rands. So if you look at it, all the time, when there's exchange, there's going to be a giver and a receiver. And for us to capture the full story about what took place, what transpired in that exchange, we need to record both. We are going to have a record of the receiver. We are going to have a record of the giver. So at the end of the day, we've got two records, that of the receiver and that of the giver. And because there are two records there, they are then called double entry. Entry is another word for records, double records, two records. Which one are those records? The record of the person who gives value and the record of the person who receives the value. And accounting that we're currently studying states that for it to be complete, every time when there's an exchange, we must record those two aspects, the receiving aspect and the giving aspect. And this thinking was brought about by this mathematician from Italy during the Venice trading system, who then came up with that understanding, and they call him Luca Pacioli. And it didn't even have a name. It was just a way of keeping records that the traders, you see, these merchant traders were traveling with big ships over the seas. They wanted a way of recording their business. And this guy was so creative, he came up with that thing to say, okay, guys, to keep the full story so that we don't have a problem tomorrow, let's have a record of who gives who, and we record both the receiver and the giver. The two aspects must be recorded. So you'll find that accounting all the time has got two things recorded, one on the left-hand side and the other one on the right-hand side. And that is called double entry. And you see, It happened long, long back, 1494. I don't want to even talk about it. And what we also need to appreciate is that accounting evolves very fast. Accounting is one subject that never sleeps. You study today as a CA, and next year, same time, there will be a couple of changes. When I started doing accounting at a level senior, when we're talking about a lease, we used to use what is called IAS 17, which is an international accounting standard number 17. But if you look at the standards now, they've since changed it to we have what is called IFRS number 16. So accounting evolves very, very fast. In as much as we agree that this Luca Pacioli was the father of the double entry principle, accounting has since evolved quite a number of times. But despite its evolution, it is still anchored on the golden rule of double entry. So if we take the double entry principle, there ain't no accounting. In the past, these guys were not even that as clever as you guys are. All they were concerned with is keeping record, and that is why their accounting was simply called the bookkeeping. They'll record in the journals, they will do the ledger accounts, and they will extract a trial balance. As soon as they got to see through the trial balance that their records are accurate, that was it. But later, people realized that recording only and keeping the accurate records is not enough. We need to communicate those records to the end users. And when we communicate to the end users, that's when accounting begins. So if you were to look at bookkeeping and accounting, you will appreciate that you can't have accounting without bookkeeping, but you can have bookkeeping without accounting. Bookkeeping is the introduction into accounting. It's a stepping stone into accounting. If you are a bookkeeper, you are just like, I'm sorry if there's a bookkeeper there, I don't mean to be rude, but you are just like a calculator in the accountant's office. Just like if you're an accountant, you're just like a calculator in the financial director's office, because in the final analysis, the financial director is the one who reports the financial statements in an AGM. Okay, so ladies and gentlemen, we are talking double entry, and don't get scared. This simply means that for everything that we are going to be recording in accounting, this rule states that it must be recorded twice, one on the left-hand side and once on the right-hand side. And before long, we'll be giving you the names of those sides. Now, because accounting is evolving very fast, there was also a need to standardize it. And what these guys decided to is to form bodies that will look at the development of accounting so that it doesn't remain stagnant. Accounting has to address day-to-day challenges. Take, for example, if you compare the prices in the shops to what they were 10 years back, you will appreciate that there is quite a lot of change in the prices in the shop. Actually, we are getting closer to an inflationary environment. And the accounting we are applying, when things change that fast, must also be geared towards addressing that challenge. You can't use the accounting you used 10 years back to deal with transactions that are so inflationary. So accounting will keep on coming up with the standards that are meant to address those new developments. We do have a body in South Africa which oversees accounting as a profession and how we develop, and we call that SAICA. That's the South African Institute of Chartered Accountants. If you get a qualification there, you're allowed to use CA. I can put Said in front of my name, but I'm not yet allowed to use CA because I need to write my APC test. All right. Someone there in the chats, okay? Right, thank you. You hear the sound echoing there. Let me see, maybe my headphones. All right, okay. It's a bit cold on my end here, so I'm putting on a very big jacket. Probably my headphones are rubbing on the jacket. So I'm sure it's now clear. Thank you there, Nazira, for that. Okay. Now, a lot of you, when you hear that SAICA and the International Financial Reporting Standard Board is responsible for setting up the standards, maybe we should just go down and explain this to everyone. Because accounting keeps on changing, it would have been difficult for people to do the same thing over the world. So that it was agreed that the people should form groups that will discuss the developments that come into accounting, and then they share them, and then they use them universally. So it becomes standard. Now, these principles that were shared relating to how we are going to develop accounting are called accounting standards. In the world, we do have what is called IFRSB. And in SA, we do have what is called South African Institute of Chartered Accountants. It is a member of the IFRSB. So SAICA does sit in that board. When they do reviews and change the rules, SAICA will also have its own input there. And when they agree, SAICA will share it to its members. And these rules, which are called standards, are actually recorded in the same way we record the statutes. You see, when you talk of an act of parliament, once it is passed, it will have different parts and it is compiled into a booklet. So that's what we call an act of parliament. And it's a rule that governs our behavior in the country. But the behavior of accountants and how they do their recording is regulated by the rules which are called standards. And these standards are also bound together into booklets. And these booklets, I just shot mine here. I was using them when I was writing my ITC exams. So you see these booklets that you see here on the corner there. So they are written SAICA, and this is written student handbook, SAICA student handbook. These are what are called the standards. If you were to do an honors and you do accounting science, you'll have a limited open book examination, which allows you to carry these books into the examination. And you're allowed to open them and see the standard and then write in answering the questions. So this here, which you see on this corner, ladies and gentlemen, is what we refer to as the standards. So when I saw your university introducing this, giving you an awareness of the standards, I was really inspired, because a number of universities that don't do that. Okay. Examples of standards, as you'll see later, we have got, they're numbered. IAS, I stands for international, A is accounting, S is standard, international accounting standard number 1, international accounting standard number 2, international accounting standard number 16, etc. I think I know them by heart, all of them, because when you write examination, you don't even have a chance to open the book. They'll say, open the standard. But believe you me, you won't even get a second to open the standard. And you see those lawyers, when they go to court, they pull those trolleys that will be having their cases inside. Accounting students at honors level or master's level, they'll be pulling those things. They'll give you a very big table. You put them there and you deflect them properly. But I don't remember myself opening them since my days at UP when I was doing tax, up to even last November when I was writing my ITC. You carry them there, you won't get time to open them. So I learned from there that I would rather have to know them by heart. All right. Now let's get to look at the objective of accounting. What is it all about? Now, the objective of accounting is to prepare the general purpose financial statements that provide specific information to a wide range of users about an entity. Number one, it is meant to provide information to the stakeholders of an entity. It also reflects the financial performance. Now, as you will see later, the statement that provides financial performance is called SOCI. That's your statement of comprehensive income. We shall talk about these things in detail later. And then it also gives the financial position, and we shall prepare a statement of financial position. Traditionally, we'll call that the balance sheet. And then you've got changes in financial position, and that is reflected through the statement of changes in equity. So what is the reason of preparing accounting? Why do we trouble ourselves by doing accounting? According to your module, it is done so that it provides information to various users of the entity. Every entity has got stakeholders, and each stakeholder has got informational needs, and they can only get that through financial statements. What else does the accounting provide? It gives us an indication of the financial performance. In simple language, it gives you an idea of the viability of the entity. Is it profitable or not? So that's what we call financial performance. And then it also reflects the financial position. What do you mean by financial position? We are saying, is this business well resourced? Does it have enough capital? You compare the assets and the liabilities. Is it economic to have this business? If the liabilities exceed the assets, then you will definitely know that that business is over trading, so it's likely to go bankrupt. And then there's also changes in financial position, which is the statement of changes in equity. When you invest, you want to see your investment growing, so to speak. And the developments every year are what we call changes in financial position. And there's a statement we prepare, which is called the statement of changes in equity. Okay, so your module guide does mention financial performance, does mention the financial position, does mention changes in financial position. I only added this part to say later, these objectives, we are going to see them when we prepare these statements, because each statement will be addressing those objectives. Okay, and lastly, we will also have an understanding of the cash flows. As you will see later when we do unit number 10, that cash flow is very crucial. It is the lifeblood of the entity. If you don't have enough liquidity in a company, that company will suffer liquidity paralysis. In other words, the operations of the company will not be sustainable. You can't pay immediate expenses. You can pay the wage bill. You can pay suppliers. And if all those things are not paid, then the company is not healthy. So cash flow is very, very important. I would have loved them to allow us to do cash flow statement, but unfortunately your syllabus just simply say mention it and leave it like that. Okay. I picked this one here from your module guide. Is they refer to it as the thick point. And they're talking about the fear that accounting is ever evolving. They're trying to bring that out. To give it context by writing the heading there myself, the ever-changing field of accounting. And your module guide brings these questions. They're saying accounting records are now being done electronically. Reporting standards seem to be changing all the time, and an awareness of IFRS seems an absolute necessity. A new accountant is going to face new challenges when they enter the world of work. Right. If you have got access to your module guide now, you'll find that this think point thing, I just lifted it verbatim from your module guide, and I just gave it a context by giving a heading there, the ever-changing field of accounting. I love the person who wrote this. I could tell the person did not, it's not a CA, but the person had an interest in accounting, he could see things that are yet to come. And he posed the questions from as an outsider, but if you're sitting in the accounting field, you would realize that the questions that he has asked are irrelevant, but they are good prompters. They get you and me to think around the challenges of an ever-changing field. Let's address one at a time. Accounting records are now being done electronically. So the question that the person is trying to raise there is, are we still in need of an accountant? Can a software operate itself from entry point to report point? And the answer is no. It can't be. So an accountant will still be relevant. And that is why the accountants that we now train are actually trained through those softwares so that they can go on to apply them at their workplace. So a software just makes the accountant's work a bit easier. It doesn't substitute the accountant per se. Reporting standards seem to be changing all the time, and an awareness of every seems to be an absolute necessity. This is very true. The standards are ever evolving, and the international financial reporting standards are also changing. And it is very important that you keep abreast with the latest development. And I could feel some sense of despair to the author of your module guide. They feel a bit overwhelmed to say there's this development that comes too fast. But the truth of it is that accountants today are being taught that one of their responsibility is to keep on updating themselves. That is why they've got what are called CPT points that they should attain in a particular year for them to be renewed as members. So that gives them that challenge to keep abreast. You can't read and say, I'm an accountant and therefore I'm done. It has to be a continuous thing. So the author of your module guide there was writing as an outsider. Actually, that's what makes accountants who they are. They should keep in abreast with the developments in the reporting standards, as well as reading the IFRS. There's nothing that brings me alive like having a pop-up of a latest development in the accounting world. I'll read it nonstop and I'll never even go to sleep. All right. A new account is going to face new challenges when they enter the world of work. Not at all, because the syllabuses are tuned to those development and they move with time. Right now, if you were to write your, okay, let me not go there. You find that they are actually integrated. Everything is put there. There are even modules that talks about the latest development. All right. So I like the big point there that your module guide did bring there, but get it from those mouth. That is not a problem. It's actually this development is what makes accounting more interesting. All right. So right, thank you there. I'll mute the lady there. All right, thank you there. All right, so that's the think point, guys. The idea of having that think point in your module guide is to have us discussing around that. And I found there is a big problem there. It's one of those things that writers of modules do bring about. But anyway, let me pause a bit. If you had a question around that think point there, please feel free so that I can explain deeply. All right, thank you. And the good part of it is that you're having a tutor who won't talk from the book. I talk from the practical world. All right. Now, there's also the standards versus the conceptual framework. Your module did try. I have already told you that the standards are the rules that we follow when we are recording different things in accounting. And because these standards say to us, record this thing this way, and we follow that everywhere in the world, you will find that how we record something in the UK looks like how we record it in SA. If an accountant were to go and work in Ireland on the Cayman Islands. That accountant will find it very easy to fit in because the language in terms of how we do reporting is universally the same. So that's the whole objective of the standards. And when we look at these standards, there's what is called the conceptual framework. The conceptual framework, it's a frame that accountants agreed upon at the beginning, and they all follow it as well. As you will see, the conceptual framework, it sounds a big word, but it's nothing. It's how we do record things in accounting. And the standards are the rules of recording things in accounting. Conceptual framework are the general rules of how we do things in accounting. The standards are the specific rules of doing things in accounting. I'll repeat this once again. Conceptual framework is how we generally record things in accounting. And then standards are the specific rules of how we record certain things in accounting. So the conceptual framework is a bit loose. It's not too tight. It's a bit optional as well. So if you were to record something and you find there's a conceptual framework about recording it, and there's also a standard of recording it, you will always give precedence to the standards. The standard must override the conceptual framework. So in that unit, in that chapter of your module guide, what they're trying to say to you there is, as the students, as you begin studying accounting, get to understand that accountants use both the conceptual framework and the standards. And at times, these two can be in conflict. In conflict, what do? Take the standard and ignore the conceptual framework. Okay. Now let's just get to slow down a bit and come down to Mother Earth. We've been talking standards, conceptual framework. These things are not very common. They sound a bit scary and boring at the same time. But let's bring it a bit closer home. Ladies and gentlemen, welcome once again. I know it's boring to listen to a stranger talking non-stop. And I think you've added 1 or 2 concepts tonight. If we are talking of the standards, I'll give you examples. They bring these at the end of your chapter, but I prefer bringing them at the beginning. Now, these are some of the examples. For your level, they may not ask you to remember how they use them in dealing with transactions, but they just want you to have awareness, just meaning knowing that there's something like this. That would be enough. The first standard is called IAS1, International Accounting Standard Number 1. What is this all about? It deals with presentation of financial statement. How do you prepare the income statement? How do you prepare the traditional balance sheet? How do you prepare the statement of changes in equity? So this is the formats of doing this financial statement. And we share it all over the world, from SA to the Northern Hemisphere. And because of that, we call it an international accounting rule or standard. So this speaks to how we prepare the financial statements. So if you prepare your own financial statements and you are preparing it from a book, at times when I get to mark it myself, if I had to get a chance, I'll frown up on it because I would see it is missing certain things. Why? Because it doesn't meet the international accounting standards. And I'm glad your modules talks to that. And then the second standard or 7th standard is your IAS 7. This talks about how you prepare the cash flow statement. And then IAS 16 speaks to property, plant, and equipment. How do we record property, plant, and equipment that we have bought? How do we measure it? How do we show it at the end of the year? That's what is called IAS 16, International Accounting Standard number 16. And then we've got IS2, this speaks to inventories. And one rule that you learn about the inventories is that the value of inventory is recorded at cost or net realizable value, whichever is known. All right. So number 2 is inventories. Don't worry about what I said just a few minutes ago. And then we have got a group of IAS rules and a group of IFRS rules. International Financial Reporting Standard 16 is lease. And then we've got IS 8. This deals with accounting policies, estimates, and prior period errors. As a company, you may have your own policies on how you deal with depreciation, for example, how you deal with the remuneration, and those are called accounting policies. And there are times when you have to do estimates, like how long will this asset be used? It's an estimate of its lifespan. And when you make errors previously and you want to correct them, we refer to that as prior period errors. And this will be dealt with in this rule, which is called IAS 8. And then we've got this one, IAS 38 is for intangible assets. And then we've got IAS 37 is called impairment. So these are some of the standards. As you sit there, I know you're feeling like, this is overwhelming. Too much information avalanche. Am I expected to remember all this? Oh, no, God, we can't. No, you are not expected to know all this. You are expected to have an awareness. The introduction always has got a problem of bringing too much information at the same time. And then as we go to chapter 2, we take the parts of that introduction and break it down. So we are giving you the whole body in the introduction. And we are yet to go back and break it and look at in pieces. So don't get discouraged by hearing these big sounding words, and they're a bit technical though, and you feel like, no, this is too much. This is not what I signed for in this module. You will enjoy it as we break it down. And then when you go back now to the introduction once again at the end, you'll say, okay, so this is what he was talking about at the beginning. I love it when you get to be completely lost at the beginning because it makes me relevant. Otherwise, if you can get it from get-go, then you won't need me. All right, thank you so much there, guys. So those are the standards that we will learn about, just to have awareness of that. So as I have indicated, standards are preceded by the conceptual framework, which forms the foundation and reference to the standard setting. So for you to have the standard, you need to have the conceptual framework first. So the conceptual framework is the base. As they set the standard, they base it on that framework. The conceptual framework is not a standard, but a foundation that enhances consistency over the standards. It is a statement of general accepted accounting theoretical principles that provides a basis for evaluating existing standards. Right, thank you. Thank you there. Right, thank you so much, Humotso there. Right, how many international standards that do we have? To be very honest, I have never counted them because there are so many, and you'll find that what you learn is unique to your economy. So the SAICA syllabus is designed to deal with the challenges in SA. So you find that as a student who is doing a SAICA accredited course, you are only made to do the standard that relates to SA only. Like, for example, there is a standard that deals with inflationary accounting environments. And because we're not yet a fully blown inflationary environment, we don't do that standard. So, Humutso, I do understand you, get your question. Please allow me to also go and research. I think I'll go to Google to check how many standards that we have. Then in our next session, I'll be able to report back to you. I only know those that are relevant to the South African environment. but there are so many of them, and I do promise I'll go and check and come back to you. All right. So we're talking about this conceptual framework, and we're saying the standards are based on the conceptual framework there. Okay. And what do we use the framework for? For evaluating existing standards, and then for developing new ones. And the framework covers 4 areas. Number 1, the objective of general purpose of financial reporting. Number 2, qualitative characteristics of useful financial information. Number 3, the elements from which financial statements are prepared. And the concepts of capital and capital maintenance. So these here are the conceptual framework, or the purpose of the conceptual framework. Now, one thing that we all need to know from get-go, which your module introduces so well, is the entity concept. Before I get to take what the module gives us, let me shoot from my head and oversimplify it. The entity concept simply says this: if you own a business, you and your business are not one and the same thing. I'll repeat that thing again. If you own a business, you and a business are not one and the same thing. You and a business must be seen as 2 different things. You see, a lot of people who own these spaza shops or these small businesses, they've got this spaza mentality of thinking, because I'm the owner, I can go there and take money, put it in my pocket, and spend it as I please. The tragedy with that is that you don't understand the entity concept. That a business is a standalone entity, and you are also an entity on your own self. And if we don't separate the 2, there's a chance that the business will suffer. So this entity concept stipulates that all the time, you must always remember that you, the owner, and your business are not one. You are considered to be 2 different entities. And your activities must be separated. If a business buys its own car, the car must be recorded as that of the business, not your car. If you go and take something from your shop, don't say, I'm not going to pay because this is my shop. You need to pay. If you take cash from the business, you need to replace it. All right, so let's get to see what we mean by the entity concept. The entity concept says that the assets of the owner and that of the business must be recorded separately. I think that's very, very important, ladies and gentlemen. The assets of the owner and that of the business must be recorded separately. What you own and that which the business owns must not be conflated. It has to be recorded separately. And a lot of businesses lack that understanding, and that is why they don't grow beyond someone's pocket. This is one of the GAP principles. Now, when we look at this entity concept, I said this is one of the GAP principles. You find your module guide is shying away from mentioning that until the end, but I brought it a bit earlier, because when you look at the entity concept, we are saying it is a principle that every business person must understand. And the question that you may ask yourself is, besides this one principle that was chosen by our module, are there other principles? Yes. And all these principles put together, they are called the GAP principles, or generally accepted accounting principles. So there is a principle which is called the entity concept. What is a principle? A principle is a way of doing things. It's a rule. So this rule says, make sure you see the business assets and that of the owner as 2 different things. The entity is an economic activity whose activities are viewed separately from the other economic units. I think it's clear there. Economic activities undertaken by each of the following must be viewed as separate entity. Number one, individual persons. Obviously, an individual person will refer to that as a sole trader or sole proprietorship. Group of persons, which may be partnerships, sports clubs, charitable institutions, legal persons, companies, and close corporations. I'll pause a bit and explain the legal persons part. I know the majority of you already know that some people here are already lawyers. They just want to do accounting in this module here. But when you talk about legal persons, maybe the best example is to start us with us human beings. When a little one is born, is taken to Home Affairs and they give that person a birth certificate, and that birth certificate brings a person into being, into the population register. So we call you a human being because you are a product of two humans. Now, a legal person is a person that is formed at law. There is an act of parliament which was passed, which you follow when you want to form this type of a person. And that is what is referred to as the Companies Act. The original one was in 1973, and it was amended in 2008. And if you look at that act, Companies Act, it outlines the steps you must follow when you are to form a company. If you're a founding member or a promoter, you need to file certain documents to CPRO in Pretoria. And when you file the memorandum of incorporation, that office will look at it and see if it meets all the minimums. If they are happy, they will give you what is called a certificate of incorporation. So the birth certificate of a company is called a certificate of incorporation. And when you get a certificate of incorporation, the company is brought into being. And because you followed a legal process, that company becomes a legal person. So that is why companies are deemed to be legal persons. Same applies to closed corporations. Remember the days of CK. Of course, in SA, we no longer form any new closed corporations. Now, associated with this concept of the entity concept is for us to understand that if you go and take something from your business, you don't just say, I've taken this mine. It has to be recorded as what we call drawings. So drawings refers to cash or inventory taken by the owner for private use. We're adding to your vocabulary there, introducing to you tonight a new term, which is called the drawings. And this constitutes either cash or inventory that the owner takes for private use from his business. You will see there will be an implication when it comes to recording that. For now, we'll call it drawings. It will also be helpful to know that because there is a question on your assignment that speaks to drawings. So as soon as you see the drawings, it's an account and you must know how it will affect the accounting equation. All right, there we go. The Nazira, the gap principle is not in use in South Africa anymore. Right, thank you so much there, Nazira. Now, the gap principle is actually is still in use because actually the gap principles, what happens is that we don't make it compulsory, but you can't be an accountant without understanding the gap principles because all the standards are based on the gap principles. There are quite a number of principles. There are so many of them, and we still use them actually. Right. Thank you so much, Nathan. Is the drawing the same as the owner drawing a salary? Right. Thank you so much, Nadine. Right now, what we will do when we talk about partnerships, there will come a point where we shall talk about a salary. There's salaries that are paid to general workers, and those are called operating expenses. And there's a salary that is drawn by a partner who is one of the owners of the partnership. Then that can also be viewed as part of the drawings. But for now, I would want us, Nadine, to wait a bit so that we do it on a piecemeal basis. it will be more clear when you talk partnership and we relate it to the salary that the owner has drawn. But when we look at an entry level where we are now, and we assume we are still with the sole proprietorship, when the person draws a salary, it is an after profit expense, because what we say there, as a sole proprietor or a one-man owned business, when the business makes profit, all the profit goes to the owner. So how you use it will depend on your choices or your preferences. You can take from that a salary. There's a way of addressing that. So at entry level, a salary and drawings should not be conflated unless and until we're talking of partnerships. All right. All right, thank you so much there. Okay. Thank you so much for the questions in the chat, guys. Keep on coming, keep them coming. I really like them. And please feel free as well to unmute yourself and ask questions. You know, the introductions are a bit boring at times because you are made to explain quite a lot. You're trying to bring people into the understanding. And thereafter now, when you have made them understood a certain level, you then put in the question, then we discuss. It will be very remiss for me to start saying, let's just do the assignment. We need to buttress the foundation first, and then thereafter, in our subsequent lessons, we shall speak more about interactive concepts. All right. Now, so that's the drawings there. Now, quickly, types of business entities. This can be categorized into the following, as far as South Africa is concerned. Sole proprietors, which is your sole trader, partnerships, your close corporation, and your companies. So these are the different types of business entities we have in SA. I think we already know that. Partnerships, close corporations are slowly fading off because we only have got those that were formed. Any new ones are no longer allowed to be formed. Right? Companies, we do have two types of companies: private limited companies and public limited companies. At some point, you'll be made to understand that public limited companies are allowed to sell shares to the public in order to raise capital. These also can be grouped in accordance with their economic activities. Right? We've got service entities, I think it's clear, and then we've got trading entities. I think we already talked about that, and then we've got manufacturing entities. All right. Now, maybe what we need to emphasize here is that when we talk about these economic activities, they will also influence how we draft transactions. The transactions around service industries are slightly different from those under trading activities. Take, for example, when you offer a service, you earn income from that service. At times it may be commission, it can be, there are quite a number of income that you can earn from a service. But if you're into trading, you sell, and then the income there will be called sales. So when you see sales, it presupposes that you are trading. But any other income, like commission, like rent income, it means that you are offering a service. So that will affect even the terminology around your financial statements. And if it's a manufacturing entity, you will appreciate you don't buy your inventory elsewhere. You make them for yourself. So you need to calculate the cost of manufacturing before you talk of selling. All right. Now this year is the business cycle. I did try following through your module guide, and then I noticed it was a bit more condensed. It did hide a lot more than I would want you guys to know. So I decided to present it according to the module guide. And then there's a second one which I presented, which is a breakdown of that and oversimplified so that you can all understand. This here is what you get from a module guide. It says maybe, just maybe, we need to debunk this thing of business cycle and make it easier for everyone to understand. When we talk of the activities of a business, they've got a lifespan. Those of you who did biology or life sciences at high school, you will remember you were taught about the organisms that maybe they'll start off as an egg, it will age, develop into a larvae, pupa, and so on and so forth until it dies. maybe it's a butterfly. So that cycle, when it is born until it dies, it's its life cycle. So same applies to a business cycle. This relates to the lifespan of a business activity. There's a beginning and there's an end to it. So that's basically what they're talking about when they're talking about the business cycle. And I was not happy with your module guide. If they were asked to ask me to moderate it, I will rewrite that part and make it a bit more relevant. But let's start from there, because this is what they will ask in your assignments. They're saying first you understand an economic activity. I would have loved them to talk about a transaction. And then two general economic activities, and then it goes on to be a transaction. So what they are simply saying there is, at the beginning, you start off with an activity, whether you are a sole trader, a sole proprietorship, engaging in activity that is selling or buying, and that process leads to what is called a transaction. What is a transaction? I'll explain later. But for now, I want you to understand is the exchange of value between two entities. It's called a transaction. Right now, I'm speaking to you. I'm giving you an understanding of accounting, and you are receiving that. So we are transacting. So this exchange, because it has got value, is called a transaction. It may not be an economic one, but it's an academic transaction. And when that transaction takes place, it has to be recorded, and that's why we talk about accounting records. And thereafter, these accounting records are converted into financial reports. And these financial reports need to be analyzed and interpreted so that every person, even someone who has never done accounting, can easily understand them. And once we all understand them, we can make business decisions. So this is what is called the business cycle according to your module. I looked at it, I say it's a good attempt. I want you guys to know it for the sake of your exams. But for practice sake, or for life as a skill, I want you to understand that when we talk of exchanges between one or two persons or even entities, it all begins with a business transaction. You go and buy bread from a shop. That's a business transaction. Why do we say it's a business transaction? Because there's exchange of value. You give them money and they give you bread. There's an exchange. That exchange of value is what we refer to as a business transaction. Some people refer to it as a financial transaction. And on a daily basis, at business level, there are quite a number of exchanges that take place. And because there are so many, they need to be captured as soon as they occur. And we do capture them by using what are called source documents. And these source documents come in the mold of invoices, they come in the mold of receipts, they come in the mold of EFT slips, they come in the form of cash register rolls, and so on and so forth. And believe you me, if you were to venture into auditing from here, we will start you from that point. And we want you to have what is called an audit trail. If we were to check the transactions, you start at the source document and say, this is where it began. Was it captured? Why not? Was there embezzlement of funds? Was there a possibility of fraud? So it all begins there because there's an auditable trail. So a transaction takes place, it is captured through the source document, and each source document is issued at the same time as the transaction takes place. And it is issued in duplicates. The customer gets one copy, the original, and the duplicate remains with the business. Why? Because that duplicate will be sorted into different groups, and it is diarized in what are called the journals. And we do have different type of journal. Your CRJ, your CPJ, your PCJ, SJ, GJ, and so on and so forth. Your cash receipt journal, your cash payment journal, your pet cash journal, your sales journal, your general journal, your purchases daybook, your sales returns journal, your purchase returns journal, and so on and so forth. So we do have a number of journals. They will all depend on the type of transactions that we had there and depend on the source document for each. And once these journals are recorded on a daily basis, they will then be sorted into accounts. And these accounts are found in what is called the ledger book. So all these journals are now going to be posted to the ledger. And in this ledger, we find classified accounts. And once the ledger is done, we need to check our accuracy to say, okay, were we correct? And we can do so through a mechanism which is called the trial balance. And the trial balance is based on the double entry concept. It says if you give 20 rands, you must record it twice. One on the left-hand side and one on the right-hand side. So in the end, the left-hand side must always be equal to the right-hand side. If the two sides are not equal, it means something was not done correct in the ledger. So the trial balance is based on the understanding that the two sides must give you the same totals because of the concept of double entry. So we check our accuracy through the extraction of a trial balance. And then if we are happy, we then can take it a step further. Oh yeah, before we get to that level, guys, all right, I'm just giving this as a skill. The module guide was a bit warped on this one. They did a very less job. I don't even know what they were thinking of, but okay. I'm just giving this as for personal enrichment. The thing that gets you marks is the original one. Never mind, it was warped, of course. But this one here, you see the steps that we have up to trial balance. Traditionally, this is what you call bookkeeping. This is the responsibility of a bookkeeper in a business. So if you're a bookkeeper, you do up to that point. That's why most of the jobs are written bookkeeping up to trial balance. And once you've done that, then you hand over your records to an accountant who then does the financial statements. And these are your traditional final accounts. And then once that has happened, you need then to do the analysis and we use the ratios for that. And once that has happened, then you can then make decision making, informed decision, because you now understand the information of the business. So I'll go back once again to the thing that you have from a module guide. I frowned upon this because it doesn't resonate with the standard. But they're saying economic activities there, then it gives birth to transactions, and these transactions are recorded. So you call that accounting records. I would have loved to see where you record that. I would have loved to see the source document. I would have loved to see the journals. And then once the recording has been done, you then have to do the financial reports, which is your financial statements. And then after that, you do the analysis and the interpretation, and then you get to have informed decisions there. So this is your business cycle according to region module accounting 1. But just to add value on that, business transactions, source documents there, journals, the ledger, the trial balance, the financial statements, interpretation, and then you make your decisions there. Okay. Now, maybe I should pause a bit there and allow people to react to this, because the fact that it is there in your module guide, it may be a spot of bother when it comes to the assignments. All right. Any question on that part, guys? Feel free. I know I've been talking too much, like someone who is celebrating that Arsenal is on top of the table. You see, I'm a strong fan of Arsenal, and each time Arsenal does well, I get the best of it. And even my lectures will always be good. When Arsenal is beaten, there's trouble at home. All right, thank you. Any question, ladies and gentlemen, feel free, happiness, Janja there. All right, thank you there. I can see someone with something in the chat. Oh, yes, Sipo. And I guess you're not Liverpool because they just got a draw, almost got walloped by the Red Devils. All right, thank you so much. All right, so please, if you do have a question there, yes, thank you, Gugu. Please shoot.
Mr. P, does a credit note forms part of the source document?
Excellent. Yes, it does. A credit note and a debit note. Remember, one is for the returns and the other one returns inwards and the other one for returns outwards. Yes, it will definitely be part of the source documents. Yes, you are right. Okay. And you will also appreciate one thing, as you say that, you remind me of something. You see, traditionally they call them source documents because they provided the information to compile the journals. So they were the source of the information we required to do the journals, hence the name source documents. All right. There are quite a number of them. I just mentioned a couple there. All right. Now let's talk transactions. I think we have seen in the business cycle, they say there's business activities and then transactions. And we need to explain what transactions are. Now, an exchange involves the transfer of cash or economic value of any kind, all right? The economic activities that have a source document. Source documents provide following details about the activity that took place: the date of the activity, the value involved, the responsibility parties. Example of source document, I think we already have seen these ones. Yes, you're asking there, does a credit note make one of the examples? Yes, credit notes there. And then you've got your lease agreements, your EFT, electronic funds transfer notes, and so on and so forth. And these are the users of the financial statement. Now you're asking yourself, hey, this subject is so hectic, but who gives it the heck? Who has got this interest? Who is so interested in this? I'll rather have my money and forget about this accounting. Are there people who will have any fuss about? Yes, there are quite a number of people who have got this avid interest in accounting, and we refer to them collectively as users of financial statements or financial information. We've got your investors. Now you will appreciate investors that can be grouped into two types. We've got existing and potential investors. Existing investors, they're old investors who have already invested in the company, and they would want to see if their company is still doing well. And you remember, investment is a risky business, and by nature, people are risk averse. We want to minimize the risk so that we can maximize returns. So the best way of doing so is when you study the information that comes in the form of financial statements from your company. There will always be signs if things are not going to be going well. And what you do, you can disinvest and save your money. Capital is said to be very footloose, meaning that it flies quickly to areas where it is tolerated. Where there is risk, capital will leave quickly. That's why you see here in Mzansi, there's a talk of investor confidence is a bit ebbing low. People are reading a lot of political risks, and because of that, associated with corruption and so on and so forth, we see capital flying. So as an investor, an existing one for that matter, you look at how your company is performing, and you're not in it for charity. You are in it for a good return. And you want to read the financials all the time to see if it is still worth it. All right, so that's what existing investors will be doing. But at the same time, we've got those who are sitting on the fence, contemplating to invest, and we refer to them as potential investors. And they want to look at the financials to see if it's worth the investment. Is it a good investment? And usually, if you look at financials of blue chip companies, they're always good. And everyone would want to invest in such companies because you are assured of a good return. So potential investors and existing investors have got different needs when it comes to financial statement. They want to look at the risk of investment and mitigate on it. All right. And then we've got employees. I think conditions of work is very, very crucial. At times, you even want to use the financial as a bargaining tool to say we're expecting an increase in our salaries this year because you have posted good profits. And you can use that as a basis of argument in a collective bargaining environment. And beyond that, you would want to get assurance, safety around your jobs. And there's no better way of knowing whether your company will be able to pay your salary than looking at their financials. And then we've got lenders. I think this one is pretty clear. Every lender would want first to assess your creditworthiness. If we give you finance, will you be able to service it? That's the billion-dollar question for every lender. So they want to check your creditworthiness. And then customers, obviously, they want to see your innovativeness. They want to see what you're coming through with and the latest development around your company. Can they still rely on you? Will you be able to supply them as per the demands, and so on and so forth? How do you react to the latest developments? How do you treat them? If we find products that do not meet the standards, how do you handle that as a business? All those things will be said in your financial statements. And it's very crucial that you speak to your customers well so that you create that goodwill. So customers will read your financial statements. And then you've got suppliers. I think it's pretty obvious. They want to see if you'll be able to pay for the inventory that they sold to you on credit. Government departments, these ones are always acting like Big Brother. They're always watching you. Start SA will be collecting data around the performance of different companies, CyPro annual returns, even the JSE, even if it's not a department with government, it does have returns that companies have to make. Minister of Finance and so on and so on. Even SARS is one that will always make sure that they get your financial statements because they want you to give to Caesar what is due to Caesar in the form of taxation. I'm one person who is a major in taxation, but I've never been a fan of tax. Okay, it's a topic of another day. So these are some of the government departments that use financial statements there, even the public there. Now, let's get to look quickly on the qualitative characteristics of financial statements. They should be relevant. They should also faithful representation. You will get through this on your own later. And the following are the qualitative fundamentals. Number one, comparability, verifiability, timeliness, understandability, and reliability. Please get to go through this part as soon as I post it. We are going to post this recording on Google Drive, and please get to look at it. And I would urge everyone here to write down things that you seem not to understand. And when we meet next time, ensure that you shoot and ask those questions. This was just by the introduction. Now, the basic assumption and accrual concept. Now, there is an assumption that we always make if we are to start accounting successful. The assumption is that it is assumed that your business will continue for the foreseeable future. When you record information about your business, you pretend or you assume that your business will continue into existence until amen. You don't prepare the financials as if your business will be closing down tomorrow. I'll repeat that once again. Going concern simply means that when we are preparing the financial statements, we assume that the business is going to continue into existence into the foreseeable future. The opposite of this is when you assume that your company will be liquidated. If we assume that your company is going to be liquidated, the process of the financial statements will be different because you are stopping existing in the following future. But when you assume that it will be in existence for the foreseeable future, there is a way that you also report. So we assume throughout this module, we assume going concern, it will be in perpetual existence. And then there's an accrual concept. Please, this one is a very good one and very important. It's part of the GAAP principles. Economic activities of an entity are recorded when they take place, not necessarily when money is received or paid. Now, when we say rent received or rent income, assume you sublet some of your building to your tenants, and you know that every month they're supposed to pay 10,000 rands. When that month elapses, at the end of that month, so to speak, you need to record 10,000 as if it was received, even if some of them have not received it. And we call that the accrual. So in accounting, we record on the day you get the right to a benefit. The question that you may be asking is, even if I have not yet got that benefit, yes, for as long as you get entitled to that benefit, on that particular day, you're entitled to it. On that particular day, it is accrued to you. We record that activity. And we call that the accrual concept. It is the opposite of the cash basis. The cash basis says you record as and when you receive cash or pay cash. accrual concept says, even if you have not paid the cash, even if you have not earned the cash, for as long as you have got the right to it, it has to be recorded. Income is recorded when it is earned, not when money is received. Expenses are recorded when they are incurred, not when money is paid. I think it's very clear there. Now, these are the financial statements of a company, guys. I'm just going to be ending before long here so that we don't take too long a time. People are tired. I can feel it now. Right? These are the financial statements. Okay, someone there has got a question there. So even if the money is not paid, there is an agreement, so you can record. Excellent, excellent there, excellent there, Nazira. As long as there is an agreement that on that particular day you are supposed to be paid that money, even if it has not been paid, you gotta record it as if you have paid. And that's what even SARS do. If you are expecting income from elsewhere, take for example sales. Let me give you an example of sales. You are a trader, you sell stock to customers, and some of them buy it on credit. As soon as you sell on credit, SARS will say you owe us money for VAT. They don't care whether you have already received that or not. And if you are to be taxed, you'll be taxed as if you have received that. Same applies to rent income. When you agree that you're supposed to get that money, on that particular day, you record it as if you have received it. That's called the accrual concept. Okay, thank you there, Nazira. Now, financial statements of an entity, they will include the following. Remember, when you look at the accounting cycle there, we said as soon as you are done with the trial balance, next step is to do the financial statement. And these are some of the financial statements that you learn about in this module. What is the statement of comprehensive income? This one is your traditional profit and loss account. And it is used to calculate profit. I'm here to scan through your module. And if I ever get in your module a phrase that says profit and loss, I will stop teaching you because I know that module is not worth my time. Profit and a lot of books, there's talk of profit and a loss. The end thing that should be called profit and loss. That's a misnomer. It's profit or loss. You can't make both of them. A business will make profit or loss. So a lot of authors, a lot of books, a lot of courses, I don't even know how they pass through SACA because they should be moderating these things. You find someone says this account is called profit and a loss. It's supposed to be profit or loss. You can't make profit and loss at the same time. So I was saying to you, ladies and gentlemen, the first financial statement that we shall learn about is the statement of comprehensive income. And I was saying to you, this comes from the profit or loss account, which you did at high school. And the second financial statement that we learn about is the statement of changes in equity. And the third one is the statement of financial position. This is the traditional balance sheet. And then we shall also talk about the statement of cash flows. Your module doesn't want us to emphasize or do more about the statement of cash flows. We just need awareness. So there are 4 statements. With 3 of them, we will do in depth. Now, the statement of comprehensive income measures the financial performance of an entity. It shows if the company is making profit or not. In other words, we calculate the net profit or net income or net profit for the year. This is done by comparing the business gross income and its total expenses, all right? So I'm just briefly outlining this because we are here to do them in detail. And this is what we shall learn, the structure before long, just in the introduction. So I'll leave it there without explaining in detail because we shall do it in the right chapter. And then the next one is your statement of changes in equity. Equity refers to the owner's interest or investment and the retained earnings. This shows whether the investment is growing or not. And this is how it will look like. Let me see here. Just want to leave the stuff that you can read on your own. I think this you can read on your own. Okay. There we go. So as we do this statement, our first thing that we shall look at will identify the balance of capital at the beginning. And we shall then add either profit or subtract loss. And then we shall subtract drawings.
and then this will give you the balance at the end of the year. So that's what the statement of changes in equity tries to explain. Don't worry about me moving fast on this part. It is just giving you the tip of it. We are yet to go back because it is covered in detail in the respective charter that follows. Right, this year is the format of the statement of changes in equity. So like, for example, balance at the beginning of capital is 1,000. You add the profit, you subtract the drawings, and the closing balance will be at the bottom. So this is typically of what you will call the statement of changes in equity. It begins with the title, Region Traders Statement of Changes in Equity as of 28 February 2021. Okay, don't worry, I'm moving a bit fast now. Now, the role of the statement of financial position, I think this one shows the financial position at a date. You can read that part. Right now, I want you also to understand that in our next lesson, we are going to talk about the elements of the financial statement. This part here, I don't want to rush you through because it is the most important part. You will see there's a table there on your module guide. They did try, but I gave it that oomph so that it is more understandable. So we shall cover this in our next session. So let me not rush you through on this part. I want to dedicate it to the right time. So in our next lesson, ladies and gentlemen, we shall start off with the elements of the financial statements. I'm glad your module is even using the right terminology. Elements of financial statements. It feels like you guys are doing the psych-accredited degree, but it is not. So I think they really, at some point, they're really doing a nice job there. All right. Otherwise, ladies and gentlemen, I would love us to end at this point. The session we had tonight was just a marathon session, just to clear off the introduction. Proper learning will start in our next session, where we shall slow down and take the concept one after the other. And it's the good part about the second lesson is that it will also cover your assignment, because your assignment is based on the accounting equation, and the accounting equation is part of the second session. So in our next session, we will be dealing with this assignment. I want us to do it and finish it completely so that we get it off our way. Usually it is difficult to tutor students when they are thinking of an assignment. When you get it off their minds, they then can concentrate properly. All right. So I'll pause at this point just to allow people to get questions and contributions. And feel free, ladies and gentlemen. And I can assure you, this wasn't my best lesson because it was an introduction. I was just going through and through. But I would have loved to pause and then have people interacting, and we move slowly. Right. Thank you so much there. Thank you there, Nazira. Thank you. Thank you, Montla. Please explain the difference between assets and liabilities. Okay, thank you so much, Montla. I actually decided to defer that to your next lesson because of it is very crucial. It is very vital on your syllabus. I thought if I were to rush it, we'll miss that. I'm glad you noticed that I just moved it through. I didn't explain that. May we make a date on the next session that will be covered very, very well, and you'll love it. Because once we've explained to the assets and the liabilities and equity, we'll put them into a relationship which is called assets are equal to equity plus liabilities, and we'll call that the accounting equation. And as soon as that is the accounting equation, we'll say, okay, let's now do examples of the accounting equation, and then we'll take your assignment because it is what relates to that part. So that's why I'm saying in our next session, we'll explain the assets, we'll explain the liabilities, we'll explain the equity and their relationship, and then we'll then use that relationship to answer your assignment. Your assignment is one of the easiest. It's the introduction of your syllabus. All right. So Montla, we will definitely go to that part. All right. Thank you there. Thank you for your kind words, Nazira there. Thank you so much. Thank you, Humotso. Thank you. Thank you, Busani. Thank you, Ethan. Thank you, Clausen. Right. Thank you, Justin. Thank you, Nazira, once again. Aideen, thank you. Ferisha, thank you. Chanel, thank you. Right, thank you, Hauhelo. Thank you, Spongile, Andisa. Thank you, Umpile. Right, thank you. Right, I've got a brother who's called Umpile. Thank you there. Right, thank you, Terence. Thank you, User. Thank you so much. Thank you there. Thank you so much. I appreciate it, guys. All right, thank you so much, ladies. All right, thank you so much, ladies and gentlemen. And you will always remember that the first lesson is not normally the best because we are still getting used to each other. As we bond going forward, then you'll find these sessions more interesting. And I would really love to convert some of you so that you become chartered accountants, because I really love that. I owe that to Saika. All right, thank you so much. Okay, thank you so much. Thank you so much. All right, thank you, Justin. I think when we get into the double entries a bit more with A is equal to E plus, yes, excellent. The answers are equal to equity plus that. I'll have more questions. Great, I love that part. I love that. I'm waiting for those questions. Thank you, Tsepiso. Thank you, Ndumiso. Thank you, guys. Thank you so much. Appreciate. Otherwise, enjoy the week and let's meet once again on Sunday. I'm sure by then Arsenal will still be winning. We are at Aston Villa. I'm hoping we'll get it right because, guys, if I don't have them winning the league this time, I won't even have a voice to teach you. Otherwise, a beautiful night to all of you. Good night, and let's catch each other on our next session. And that will be on the 14th of April. And Flint, thank you so much. I'm sure you're still around there. All right. I don't know whether you've got your last words before we close the session. Hi, Governor. Are you there?
Yeah, I'm here.
Thank you.
No real last words, but once again, thank you.
Thank you so.
I'm sure we're going to finish the assignment next week because everyone's stressing about that.
Thank you.
But yeah, thank you. So far, very informative.
Thank you so much. I appreciate that. Thank you so much. All right. So yes, let's get to do the assignment next week because we have opened it up by touching the accounting question. And that very assignment is based on that. So as soon as we bring the accounting question into our understanding, then it will be easier for us to use the assignment as an example. So yes, the assignment will be done by next week. And let's do every part of it. We'll just change a few figures, but it will remain essentially the same so that you guys can go on and write it and put it aside. And then we'll run with the syllabus thereafter. Thank you so much, guys. I really appreciate your time. I'll now end the session. And remember, we are going to post this one. If you feel there's something that you need there, you can check it on Google Drive. Thank you, that's episode. Thank you. Truly, Arsenal has to win. Otherwise, if it doesn't win, my contract with you ends. Thank you so much, guys. I appreciate your time. Thanks.
Good night, Mr. P.
Thank you so much for sharing. I appreciate it. Thank you so much. Bye. Bye.